Welcome. Thanks for spending some time with me to learn about starting out as a sole trader and what you need to know if you also have another job. I'm Antonia. I'm an accountant and a small business owner, and I create videos weekly breaking down accountancy for small business owners, giving you tips and best practices to help you start, grow, and stay tax efficient. This video is for you if you have a business idea but don't know what to do next, or you've been running your side hustle for a while but aren't sure how it affects your tax, or you want to know how to reduce your tax bill legally. By the end of this video, you'll understand what a sole trader is, how tax works if you have another job, and a key tip to help you save on tax. Before we dive in, hit that subscribe button for more small business tips, and if you have any questions, drop them in the comments. I always reply. What is a sole trader? A sole trader is simply an individual who starts a trade, meaning that you're selling something of value, whether it's a service or a product. You can trade under your own name or a business name. Just make sure that it isn't already taken. Key point is there is no separate legal entity. You and the business are the same in the eyes of the law. A few things to consider if you're just getting started as a sole trader would be open a separate business bank account. This keeps your personal and business transactions separate, which is good. Sort out your branding and target market. Who are you selling to? How are you going to reach them? And how are you going to make it look good? Check if you need any licenses to trade, which you might do in some specific industries like accountancy, and then start selling. You can use online platforms like Etsy or eBay, or you can set up your own website and start trading from there. Keep track of the expenses that you suffer and make sure you keep all of your receipts. Yes, not some of them, all of your receipts, please. And then finally, get some business insurance. This protects you in case something goes wrong. If your business grows, then review your insurance regularly to make sure you still have the cover that you need. Let's talk tax for sole traders. So when do you need to register? If you're going to earn less than £1,000 in a tax year, then you don't have to. You're covered by the trading allowance and you don't have to pay any tax on those earnings. This is sometimes called like the side hustle allowance, and it's for people who trade a little bit on some online platforms like eBay for second-hand goods or vintage, for example. If you earn more than £1,000 in a tax year, then you need to register with HMRC for self-assessment. You can still use the trading allowance in that situation, and it depends on how much expenses that you've suffered during the tax year, if it's worth doing it or not. So if you make £2,500 selling on Etsy and you suffer £500 in expenses, then instead of claiming tax relief on all those individual expenses, you instead claim the £1,000 trading allowance, and this is more tax efficient because you're deducting £1,000 instead of the £500 that you actually suffered, and that gives you better tax savings. So what happens if you have another job? So because you're an individual and everything's the same legal entity, then all the income gets wrapped up together in the same tax year. So the first thing that you should do when you're planning is, if you're an employee, then get your latest P60, which is your tax document, which you'll get after April, and it shows you how much tax you've paid and how much you've earned in the last tax year. Now, why does this matter? It matters because your sole trade income that you generate gets added to your employment income for the tax year, and that can push you up the tax bands. So by checking the P60, you can see how far away you are from reaching the higher rate tax band if you're not already there. An example would be you have a full-time job and you earn £45,000 gross per year. That is £5,270 under the higher rate tax threshold. That means in your self-employment, you only have room to earn another £5,270 before you're pushed into that higher rate tax bracket. And then for every pound of profit that you make, you're going to get taxed 40% on it, instead of the 20% basic rate band. So self-employment income is taxed in the same year that you've earned it, and it's added onto any employment income that you've got. You can't defer it or choose when you're going to take it like you would be able to in a limited company. If you earn more than that 5,270 and you find yourself in the higher rate tax bracket, or your job already puts you in the higher rate tax bracket, then there is one thing you can do to try and help with that tax burden. A great way to reduce tax is to invest in a personal pension. This helps because personal pension contributions increase the basic rate band, meaning that more of your income falls into the 20% tax instead of the 40% tax in the higher bracket. You can set up a personal pension by using a search engine and finding some of the new app ones, or you can check your workplace pension to see if they allow personal contributions in addition to the workplace pensions that you probably make through auto enrollment. When you're searching for a personal pension, if you're going to set up a new one, just make sure you look at a few and check the fees between all of them to make sure that you're getting a good price for your investment. So if you've earned over £1,000 through your side hustle or your self-employment, then don't miss these key deadlines. If this is your first self-assessment, then you need to register for self-assessment with HMRC, and you need to do this by the 31st of October after the tax year. So right now we're in March. The tax year ends on the 5th of April. So by the 31st of October this year, you would need to register with HMRC for self-assessment and get your UTR number. And that's so that you can file your self-assessment declaring the income that you've earned through your self-assessment and paying the tax, which is due to be filed by the 31st of January 2026, and that's when the tax is also due to be paid. If you expect to owe tax, then a key tip is to set aside 20% each month of the profits that you make so that you don't get caught out by not having enough saved up when you need to pay your tax bill. So today we've covered how to start as a sole trader, what tax you need to pay and how it affects you if you have another job, and how to reduce your tax bill with smart planning. One final tip from me is keep a close eye on cash flow. It's key to running your business smoothly. I've got another video on cash flow tips, so check that one out next. If this video helped you, please give it a thumbs up. It helps other people find this information too. Don't forget to subscribe for weekly tips on managing your business's finances, and drop any questions in the comments below. I'd love to help. Thanks for watching, and I'll see you next time.